We have with us Mr. Ashutosh Khajuria, President Treasury at Federal Bank. Thank you very much, Mr. Khajuria, for being with us here on NDTV Profit. Good to have you on the show today. After the PMI data that had come out from China and the kind of reaction that we saw in the equity market and the currency market, there was a significant pressure. And the move that we've seen today, what do you really expect from the rupee going forward?
It's always flight to safety whenever you have any turbulence happening in the markets, whether it was the Iran-Saudi standoff, or whether it was data coming out of China. All these international events definitely have played their role as far as rupee's external value is concerned. And as a result of that, I think rupee depreciated yesterday. But whatever said and done, I think amongst the emerging markets, rupee still, should play better than the peers, and that's what happened in 2015 entire calendar year, and this should continue in 2016 as well. Going forward, yes, because we run a current account deficit, there would always be a pressure on rupee depreciating, but as long as it depreciates, representing the inflation differential between the two countries, US and India, I think it is always welcome. Because then that doesn't result in exporters losing their competitiveness. And as you know, exports already are under pressure. We have consecutive 13 months of exports falling. Of course, part of it is because of the commodity prices going down, and as a result of that, the export of petroleum products as well as export of gems and jewelries in absolute terms have taken hit, but then it's equally compensated by reduction in imports. I think rupee should have a gradual depreciation that would be in the interest of external trade, but that should not bring in sudden volatility in the system. As we'll have any international events developing, naturally the pressure would be more on emerging market economy, currencies of emerging market economy. And rupee would not be an exception to it, but vis-a-vis other peers, it would hold strong.
Right. So, in terms of this gradual depreciation that you're talking about, what could be the level, according to you, that you're watching out for in the near term for rupee?
See, I see 1% depreciation every quarter as a welcome thing, between 0.75 to 1% per quarter. So if it falls by about, say, 50 to 70 paisa per quarter, it would always be welcome.
But do you think, RBI will let that happen, considering, they still believe and maintain that for them, the target of the rupee, of course, is not important, but the volatility, curbing the volatility is the biggest aim right now?
That's why I said if it is 50 paisa in a quarter, it is not too much of a volatility. So if that 50 to 75 paisa, if that is happening, in a quarter, it's not going to bring in much of a volatility, because that would be lesser than 1%.
Right.
50 paisa would be less than 1%, and 66 paisa would be exactly 66 to 67 paisa would be 1%. So if it is in that range of 50 to 70 paisa, it's not going to bring in too much of volatility in the system, and that would be welcome. Why? Because we run an adverse trade account, and because trade account is adverse, anything which goes in favor of exports, that bias would still continue and should continue.
Right, but at the same time, Mr. Khajuria, the kind of weakness that we've seen as far as Chinese currency is concerned, the yuan out there, do you think going forward that could further put pressure here on our currency? And we've got US Fed rate hike, which will also happen this year. And where do you, in the worst case scenario, where do you really see the rupee heading?
See, that makes it all the more necessary that rupee should be allowed to depreciate. Because if yuan is depreciating, that makes it India more uncompetitive vis-a-vis China. Already we run a huge, trade deficit vis-a-vis China. And there are certain products where we are competitors to each other, like textiles and all. So I think if yuan is having a tendency to depreciate, I think it's all the more necessary and welcome that rupee should also be allowed to gradually depreciate without bringing in sudden volatility, because that would hit the real market. So real economy should not be hit because of too much of volatility in the system, and for that I think definitely central bank would be looking at it and moderating it. But I think a gradual, slow-paced depreciation for rupee, because India runs a higher inflation vis-a-vis US, even fundamentally is welcome.
Right. So your view that rupee should be allowed to depreciate gradually. Also wanted to have a word on the bond and the yield. I mean, in the year 2015, of course, that market was interesting here in India, but now the scenario has changed in the US. So how do you really see bond yields going from here on?
See, in a softening interest rate scenario, we have never seen, the repo rate and 10-year yield, the differential to be, consistently closer to 1 percentage point. But of late, in last 3 months, particularly, after the 50 basis points cut was effected on 29 September, we didn't see 10-year GSEC yields, falling correspondingly. And in fact, for a major period of the previous quarter, Q3 of this financial year, we saw yield, 10-year yield, benchmark yield to be higher than what it was before the cut was effected on 29 September. So that, and plus the differential repo rate being at 675 and 10-year yield quoting at around, 772 to 775 levels, or 770 to 775 levels simply represents about 95 to 100 basis point spread, which in long run would not sustain. And I think part of it is standing corrected with announcement of new 10-year on, the Monday close. That's yesterday evening. That announcement was made. The new auction, which is going to happen on Friday for the 2016 10-year benchmark, maturing in 2026. It's already trading at about 755.
Right.
Already trading.